Good morning and good afternoon for some. I know folks are calling in from all around the country. We're just past the 11 o'clock hour, at least in Central Time. We're going to get started in a few minutes. I know you see some smiling faces of all of our panelists here, and they're super jazzed and ready to go. For those of you who dialed in early, you're probably hearing me say this for the third time. So just smile and know that we'll be getting started in just a few minutes as we just wait for folks to wrap up calls that tend to run over. But if you just hang out with us for a few minutes, we'll get started. So thanks for your patience, and I'll come back to you in a few minutes. If you just joined us, you're in the right place. We're just waiting a few extra minutes. The count on the participant log here is going up. And so just bear with us as we wait for folks to end some calls and get settled here. If you're like me, you got a glass of water or some tea. Some of you, it might be lunchtime at the 12 o'clock hour. Feel free. We're gonna get started in just a few minutes. All right, it's time. So we're gonna get started here. I know some folks will be joining us as you come in, but want to be respectful of your time and appreciate you joining us for what will be a fun, insightful next 2 hours with us. My name is Cherise Conanan-Johnson, and I'm a managing partner here and you have just tuned in to our webinar on bold breakthroughs using equity capital and revenue-based financing to invest in entrepreneurs of color. Some of you might have downloaded our paper on this topic. Others might be coming to this for the first time. Either way, you're in the right place. I'm super excited because we have an esteemed slate of panelists to talk about this issue, but also talk about the opportunities in equity-based financing and revenue-based financing, and particularly to the communities that I know so many of us around this virtual world care about a lot. And so without further ado, for those of you unfamiliar with Next Street, we are a mission-oriented advisory firm that is trying to revolutionize how do we get more capital and customers and services to small businesses and entrepreneurs through our clients, which are foundations, corporations, government entities, business service organizations, CDFIs, community development financial institutions, and the like, such that we have a more inclusive economy. We strongly believe that small business and entrepreneurship are the engines of growth to our economy. And so we are excited to bring to you this particular webinar because the folks that you're about to hear from span across the country and have expertise in this area. We got so much insight and excitement from, I'm sure, many of you to ask us to have this kind of conversation. And so that's what we're going to do today, to have a conversation. And I know in our COVID-19 era, we can't meet in person as we want to, but we have the opportunity to do so in this virtual environment. So that's just what we're going to do. And so I want to introduce all of our panelists today. I will be serving as your moderator. And first, our panelists are going to give us a 2-minute lightning round introduction of who they are, where they're calling in from, and the organization that they represent. And so I am going to start with Kim Folsom. Kim?
Good morning, good morning. Kim Folsom, founder and CEO of Founders First Capital Partners, calling in from San Diego, California, sunny San Diego, California. I'm so excited to be here, and thank you so much, Charisse, for giving me the opportunity to amplify the work that you all are doing at Next Street Capital. A bit about what we do at Founders First. We are an accelerator and a revenue-based funding platform with a mission to fund and grow diverse founders, to grow them to be mid-market companies. I came to this from the other side of the table as a six-time founder of tech companies, grew them to 10 million, raised over 30 million in venture, and wanted to see more people that looked like me to the right and the left growing companies. Looking forward to the conversation.
Thank you so much, Kim. I'll pass it over to Irma Olguin.
Yeah, good morning from my side of the map on the West Coast, headquartered here in Fresno, California. My name is Irma Olguin. I'm the co-founder and CEO of a company called Bitwise Industries, like I said, headquartered in Fresno, California. Basically what we do is build technology ecosystems. You can think of us as a starter pack for how to ignite the technology industry in cities where you wouldn't normally find it, right? So we're not in, the Silicon Valley and in the Manhattans and the Chicagos of the world. We're in the Fresnos, Bakersfields, Merceds of the world. And that is our mission, is to take folks who are very often overlooked in the technology industry and provide pathways for them into high growth, high wage jobs. And we do that in a number of ways. But very specifically in ways where you can find the technology industry in these underdog cities, and you can build and ship world-class software and software companies out of those same folks who have been historically overlooked. Been at it for 7 years and have had some really wonderful success, and are taking our model across the nation now. And so really excited to be here to talk about what a more equitable future looks like for folks who are building business.
Thanks so much, Irma. I'll pass it over to Linnea.
Good morning, everyone, or good afternoon, wherever you are. I am sitting here in somewhere near Hollister, California at a ranch. So I'm just grateful that Wi-Fi is working, but excited to be a part of this. I am the founder of Gingerbread Capital. We do 3 things. We make direct investments into startups and early stage companies that were founded or co-founded by women. We also actively participate as an LP in funds that are led by diverse founders. And so Harlem Capital is a good example of that. Female Founders Fund is another good example of that. And then the third thing we do is we try to work on the ecosystem of trying to get more women focused on this asset class. I saw a gap in my career on Wall Street that I had never made an investment in a private company, let alone an early stage company, let alone a company that was started by a woman. And once I started looking at it, I saw the extreme gap. And so we started this fund just shortly before the Me Too movement. And so we were positioned very well when the noise level very gratefully went up. So I'm excited for this conversation. Charisse, thank you for including me.
Thank you so much, Linnea. I'll pass it over to Kobe Sandy.
Hi, everyone. It's great to be with you all. My name is Kobe Sandy. I sit on the Impact Investments team at Macarthur Foundation. Macarthur is a roughly $6.5 billion Chicago-based private foundation. And our mission at Macarthur is really to create a more just, verdant, and peaceful world. And for us, that really, with leading with justice, that translates into reversing inequalities across society. And one of the key inequalities I think that we've identified and try to work towards is really around addressing the access to, gaps in access to capital. Too often we know that capital that's provided by conventional banks and investors fails to really reach and meet the needs of small businesses and people of color, small businesses led by people of color and by women in this country. And this is really what led us at Macarthur to begin making impact investments almost 40 years ago. And this is why we've allocated $500 million of our endowment towards making impact investments. So for us, our investing approach is really around bridging these types of capital gaps, really in efforts to lead to creating a more just world.
Thank you so much, Kobe. And last but certainly not least, to round out our panelists, Shweb Siddiqui.
Good morning and good afternoon, everyone. I am sitting in a slightly rainy New York City. I am the Director of Impact Investing at the Consortium Foundation. We are a private 100-year-old family foundation. Our mission is to build healthy and just communities in the United States, and we look at everything through a social justice lens with a particular focus on racial equity. In 2017, the Consortium Foundation allocated $100 million of our $1 billion endowment to focus on how do we invest our capital in a mission and values aligned way. And one aspect of that is how do we support entrepreneurs of color to get access to capital to grow and scale their businesses. We can talk at length about the historical issues that have existed and how new entrepreneurs of color specifically lack the ability to access capital, and what are the pathways that we create, what are the different funding mechanisms that we can create to enable entrepreneurs to grow and scale their businesses, ultimately to create wealth in their community. And that's what we believe is a critical part of what we're attempting to do. And I'm really excited and looking forward to this discussion and sharing some of the exciting things we've been working on.
Fantastic. Thank you so much, Shweb. And so you heard from our panelists a bit about who they are and where they're calling in from. We want to make this webinar interactive. This is not going to be us talking to you, particularly in this into a computer, but we will make it, the engagement. And so I'm going to invite those who are listening in to put in the chat your name, your organization, and where you're calling in from. And you can just do that name, comma, organization, comma, the city that you're calling in from, just so that we can get a sense of who is with us. To be quite frank, us panelists see the view of just each other. And so the only way that we can see you is through the chat in terms of how you respond to us. So we're going to be using the chat a lot during this engagement, and that'll give us the energy we need. If you have a question throughout, I encourage you to use the Q&A function, to send your questions, to send your thoughts, or if you like something that a panelist said, just say amen in the chat. Say whatever it is that gets you excited or that you have a reflection to, so that we can make this as, again, interactive as possible. Now first, we want to get a sense of who all is here. You told us your name and where you're calling in from. We're going to put a poll up here. We want you to tell us what is the best word that describes the organization that you represent. We'll just do a quick poll. That'll help us orient ourselves in terms of what organization you represent. So go ahead and push that poll, what you represent. And again, it's the one that best describes you. Sometimes there's a bit of a crossover in terms of the organizations that you represent, but just put the one that best describes you. We'll leave it open for about 10 seconds to allow you to click on that button, particularly while you put your name and organization in the chat, but go ahead and click that button. And Katie, in about 5 seconds, you can go ahead and close that poll so everyone can see where we're calling in from. Great. Lots of CDFIs, lots of folks, you know, from business service organization. We have some bankers on the line. We have other. So we'll know in the name in the chat some of the organizations that you represent. But we have a nice mix, so that's great. The second thing, I want to make sure that we orient ourselves. Our whole goal, again, is to have honest dialogue. We're going to talk about the challenges that entrepreneurs of color face. We're going to talk about some of the solutions. We're going to talk about, you know, ways to move this conversation forward. And so one of the ways that you can help us do that, and don't worry, we're not going to let you get away with just sitting there. You're going to actively participate. I want to ask you one question. What do you hope to get out of today's webinar? So thank you. Our hostess with the mostest, my colleague Katie Beach, is manning our polls here. So thank you, Katie. What do you hope to get out of today's webinar? You're going to check all that apply. The first one is learning about the challenges facing entrepreneurs of color. The second, learning about proposed solutions. You know, answer my questions about the equity capital gap for entrepreneurs of color, or I'm actively looking to apply the learnings to my own attempts to provide equity or revenue-based financing. Check on all the ones that are applicable for you. We want to see the your desires, such that as our panelists, you know, tailor their remarks and engage with us today, they'll know exactly what's most top of mind for you and in the crowd. So make sure you check your box, and you can do so if you're just joining us. We're live engaging in this poll. So if you haven't checked your box, do so. I'm going to give you 5, 4, 3, 2, 1. So we'll close that poll and let's see. Oh, nice even split. Goodness. Folks want to learn about proposed solutions, and I'm super happy because the second most popular thing is that they want to apply the learnings to your own attempts to provide equity or revenue-based financing to businesses. That's fantastic. Panelists, you ready? You got your insights. You know where folks are situated. So I'm going to share briefly some of the findings from our report to just ground everybody in the conversation, and then we'll dive into the questions. So just moving forward here, our report highlighted that Cook County, which has a population of 57% Black and Latinx individuals, only 9% of firms in Cook County are owned by those same Black and Latinx individuals. And then they only generate 6% of the revenue here. And so there's a big disconnect between the representation in Chicago specifically and the business performance of those same firms owned by Black and Latinx. I'm using the terms Black and Latinx in this particular report where the findings reflected people of color as defined by Black and Latinx for the purposes of this research. Obviously, people of color spans a much broader gamut, but I'm kind of centering us on these particular demographic groups, given the particular needs that we found here in Cook County and then also in Chicago specifically. So we know that this gap is wide between the population and the revenue generated. What does that mean for us when we think about the state of capital here and the demand for equity capital? What our research told us is that here in Cook County, folks, and particularly Black and Latinx, have a desire to ask for over $180 million of equity capital, but only receive 36 million of equity capital. That means that $146 million is unmet by their demand, which is 80% goes unmet. That's a big issue. When you compare it to the white population, that gap is just 46%. And so that's why we're all here, to one, understand why that gap exists, but also, more importantly, we think, is to get to the solutions. And so I want to start with our panelists. In our research, and particularly I want to talk to you right now, Kim and Irma. The contributive factors that we've seen are really summarized in 3 points. One, the lack of availability and the scale of local equity capital providers. Two, there's a product size mismatch where you don't have the right products. For instance, a revenue-based product where you have a lot of debt, and also the size that entrepreneurs and small businesses might be looking for just doesn't match up. And then three, which everyone, I think, at least on the panelists, know is an issue, there are limited family and friends capital that tends to get a lot of entrepreneurs and small businesses started. So I want to first start with Irma. If you can kick us off here, how have you seen these challenges either affirm your own experience or play out in your own journey?
Yeah, thanks, Sharice. I think, all three of those bullet points are incredibly important, and I've experienced each of those on a personal level, but I think they're all really tied together in this, the heart of it. And that I think in a lot of the communities that we're discussing in the Black and the Latinx communities, what entrepreneurship is in those places is not often recognized as entrepreneurship in other places, right? So the idea that, I think we think about things like fixing cars or installing car radios, in a garage on a weekend as a neat skill to have, but not entrepreneurship. And that's not true. It's absolutely entrepreneurship. But tell me what product on the market fits that need, right? When you need to buy some equipment, when you need to buy wiring harnesses, and when you need to, stock up on speaker boxes. So I think really what it comes down to is not recognizing what entrepreneurship actually looks like in some of these communities. And then because of that, not having the correct product to fit what that is. And then I think the second point that you made, and this is, this one goes deep, and that is the myth that is friends and family capital in these communities of color. The Black and Latinx, we can talk about numbers and they're frightening, right? But in an emergency situation, the typical or average white family is able to ask friends and family for money and get up over $3,000 in an emergency situation. In a similar emergency situation, a Black or Latinx family is lucky to cobble together between $300 and $400 in an emergency situation. This is not even talking about when you want to start a new endeavor, right? So if the very best you can do by begging in an emergency situation is a couple of $100, how are you ever going to get enough flexible capital to get a new business off the ground, right? friends and family capital and the communities that we're talking about is a myth. And so I think that that's a massive, massive disadvantage. And those are not things that are easily fixed, or at least they're not fixed overnight. When we think about the wealth gap and what it would actually take to address those issues. They are systemic, they are generational, they are decades long, hundreds of years long issues. And it's going to take the creativity of not just the folks on this panel, but everybody who's joining us, I think, in terms of the participants in the audience, to really put our best brains together to solve this.
Thanks so much, Irma. And Kim, I want to move over to you and see if anything that Irma says vibes with you, or anything else you want to talk about in terms of your own personal experience and the challenges, but also all of the entrepreneurs that you touch. And I would ask for you to also touch on what you've seen folks do to overcome some of these challenges. And I would say, before you jump in here, I want to invite the audience, if you have a question around the challenges, the three that I mentioned, or anything that Irma or Kim is about to say, so that we can get your questions answered as part of this, we'll do so. We'll have some dedicated break time in terms of answering those with the panelists. So, feel free to put your questions in the chat. Go ahead, Kim.
Thank you for sharing that, Irma. And Founders First, we've worked with over 300 businesses, and we have a pretty wide view of inclusivity. But the majority of our founders are folks of color, and of that majority are women of color. And so I would say that this particular challenge is, just building on what Irma said, at the crux of it, there's the wealth issue. There's a huge gap that's grown even further between the amount of wealth that is in traditionally white families that are able to get access to capital in emergency situations or to start a venture, compared to that of in a Black or Latinx family. But I would also go through and look at it from the standpoint, there are some sustainable business models that are in communities, and being able to leverage those things to kind of pick up with what Irma mentioned. I came to my path to entrepreneurship as a software engineer. And so, the language between the entrepreneurial journey in most majority communities is so distinctly different than the experience in most folks of color community. And so because of that, the expectation of growth of those businesses, and just even though the ecosystem, there's been this function or the expectation of fitting a square peg into a round hole. Banks and equity capital providers have not been a source of capital for businesses led by Black and Latinx folks for the most part. I mean, 99% of it doesn't go to those founders. Additionally, the businesses, as Irma mentioned, she talked about the automotive, but on the other side, hair and beauty has been a big industry for Black business owners. And if you look at, in most Black communities, the Black business salon has been an ongoing successful business in every single community. Every single city always has one. And there's the dynamics with regards to how that business runs. And so some of what we do at Founders is helping our business owners recognize that there are models that are successful that can help you grow your business, such as the fact that Black business salons use a recurring monthly model, which helps them be sustainable. Most successful salons are running an average of a $250,000 business on an annualized basis. And, being able to replicate that with other products and services are helpful. But most ecosystems don't break it down like that. It's just you start a business, but the difference is most businesses started by Black and Latinx founders are transactional businesses. So it makes it really difficult to have those businesses be sustainable. And that's one of the reasons why models like recurring revenue does work, because it's tied to that revenue stream, but you first have to make certain that you put in the infrastructure that provides for a recurring model. Going back to my own journey, again, because I started my career in the tech side, I was fortunate enough to get my business to be $250,000 to be able to meet some of the guidelines and requirements of banks, but it's a difference of language between, there's this expectation of, well, you have capital there. Why isn't it being able to be accessed by communities of color? And there are a number of requirements that have to be mitigated on the side of the capital providers, but there's also an understanding of applications to the actual business models that are used by Black and Latinx founders to make there to be a meet in the middle. The last thing I want to bring up is the fact that while I've been a direct revenue base provider or investor for over 5 years, not all revenue-based models are the same. There are different models that work for businesses that are less than $500,000, and there are models that work for businesses that are between $500,000 to $3 million, and then there's those that are over $3 million. And you have to make certain there's the appropriate fit, because if they're not, you're going to run into the same issues that you have with having fixed debt that isn't necessarily a fit for the different cycles that businesses go through.
Thanks so much, Kim. I think one of the important things that you said is that I loved how you articulated the difference in language used between different communities around entrepreneurship and the expectations. One of the questions that we got, and thank you, Mark Sung, for your question, and I'll open this up to all of the panelists, and based on what you see and what you've been experiencing, but how can we calculate the social network, so that social capital that connected often white entrepreneurs and small business and families have to pull in? So if I'm starting a business, legal assistance, real estate searches, political guidance, all that social capital, which tends to be I think an asset to many businesses, but sometimes Black and brown businesses don't have as much. So that's a challenge. How would you think about answering that question? How do you capture that? And how do you address sometimes that disconnect in that social capital?
That's directed to me.
It's open.
Okay. So, I guess social capital is important, but I also want to recognize the fact that Black and brown communities contribute a significant amount of revenues and wealth outside of our communities. And we have to recognize that we have a significant amount of influence with regards to the contributions to food communities, apparel communities, and all of that wealth that does not stay in our communities. But if it did, if there's a way for that to occur, then you're going to have quite a bit more resources. The other thing that's different with regards to the social capital is I can't speak, specifically for Latinx communities, but in Black communities, you many times have in a family an individual who's carrying the weight for a lot of folks in their families. And that is another different paradigm that you have compared to other families, where there's, it may not be the responsibility of one individual that is putting, siblings through school and helping, with the family's economic situation. So those things have to be, taken into consideration when you think about the dynamics. Some of our resources and wealth is going to further communities outside our direct community. And then the other side of it is we are often having to show up and fund several different families beyond just the one individual.
Absolutely. Thank you so much, Kim. Linnea, it looked like you wanted to get in there on that question.
Yeah, I think, one of my observations, just having spent a lot of time around gender diversity on Wall Street and now being very distinctly focused around backing diverse founders. What I've noticed over the years, we tend to participate in closed loops. So a bunch of white women getting together and talking about how hard it is to be a woman. Or, you know, whatever the group is, you know, one example, there's a large women's private equity conference that takes place. And I would get so many comments from men saying, where do I find women in private equity? I'm like, you know, you ought to go to that conference and just put a kiosk outside, and you could probably meet several hundred women in one day. And so I think we have to, every day, think about how do we pull someone in that's not us. And so as a white woman, how do I every day think about, and it's amazing, like just one reach out to someone that needs that little bit of assistance. And it doesn't need to be a venture check. It could be an introduction. It could be a connection to a group of angel investors. And so I'm hopeful that one of the things that we're seeing is that you have many, many more white men and women that are focused on this. And if they could just not try to boil the ocean, but just try to do a couple things a week to advance this cause. And it could be reaching out to a colleague, it could be, and then I think on the other, I believe that solutions are always two-sided when you get two people working towards something. So I would definitely encourage, and I do encourage, when I talk to founders, are women founders or founders of color that know how to build these networks outside of themselves, they make it really easy for me to help them. And so they give me the email they want me to forward. They say, can you introduce me to these types of investors? Can you do this? And so I genuinely appreciate people that come to me with a hard ask and they make it easy for me to help them. And Sharice, you've heard me say that 1,000 times, so you're probably tired of it. But just reach out to someone outside of your own group. And I try to do that, you know, most days.
Oh,
Can I
you
add to
do.
that?
Yeah, go ahead, Irma.
Yeah, that's really important. I think what Linnea is talking about, and the idea that the connection is the coin there, I think maybe is only half of the equation. It's also knowing how to talk to that connection or how to navigate that new system, right? So in our business, we have a three-pronged business, and we, like I said earlier, we build technology ecosystems. One of the pieces of that technology ecosystem is to build community. And so we have a sense of place where we buy blighted buildings and we rehab them and lease them back out to the technology industry. But I can tell you that when we started, I didn't know anything about commercial real estate, not one single thing, right? Like I thought like a for lease sign on one building was the exact same thing as a for lease sign on another building. It's not true. There was a set of studies that came out about a decade ago called Bridges Out of Poverty. They put it into a book. It's really, really wonderful. And in that book, the argument is made that if you want to change socioeconomic classes, you've got to have somebody from that other class helping you to get there, to help you navigate what that new system is. Because you're going to signal unintentionally all the time that you don't know what you're doing. Right? It's like, and one of the examples that really resonates with me in that set of studies was, you know, if somebody dies in an upper middle class family, you go to the wake, you might bring flowers, right? Somebody dies in a lower class family, mine included, you're going to bring a lasagna, right? Or food to the wake. If you show up with that lasagna, your home cooked meal to a more affluent wake, you've essentially signaled that you don't know how this new system works. Right? You don't know how this new community works. And I think that is really, really hard to pinpoint sometimes, is that Linnea has been very generous, and we're really fortunate to have gingerbread in our cap table. And she would absolutely, if I crafted the correct email, forward that or open up the black book to the correct connection. How am I going to know what to say and to whom is the missing piece to that equation, though, I think. And it's got to be, I've got to ask a little bit more of Linnea to say, I will absolutely craft that email. Tell me what I got to say. You know, like, and so that's the other part to it, is like, there's a humbleness and a vulnerability there that the folks on the other side of the table, I think, it is Linnea that's going to lift me into that next socio class, or economic class rather. And other folks like her because they're willing to do that level of work.
I'm just saying, Irma, I want the lasagna. I'm just putting that out there. Okay. But Irma and her partner Jake are masterful at this. So they've always been way up the curve, but it's such a good example. The notes I get from Bitwise around, this is what we're doing well, this is what we're challenged with, here, can you make this introduction? These are our needs. And founders that sort of get into that cadence of being really comfortable asking for what they need they're the ones that are rewarded.
I love that.
If I could just make one more comment with regards to that exchange, is that's the whole new language that has to happen in between. And it takes the ARMA being vulnerable to say, hey, not only going to make that ask, but I need to understand. And then on the other side, Linnea being able to go through and say, okay, I'm willing to spend the time to teach you this new language. And many times that gap does not happen. And that's what is that is the biggest barrier to make that capital flow in between. And it's not just the cash, it's also the social capital, it's those relationships. And it takes time to build those, but it's so valuable when it occurs.
Amen. Amen to that. And so with that, I want to ask the audience, you heard a couple of the challenges that we spoke about in the last couple of minutes. I want to see if you've been paying attention and as you sit behind the computer here, but I'm going to ask, which challenge is, do you see the most pressing in your own purview or even from what you heard? Is it around the lack of availability and scale of local equity capital providers? Is it around this product size mismatch? Is it around limited friends and family capital? And I would even add a fourth, which has come up in this discussion, the social capital. If that's your answer, put that in the chat. But otherwise, I want you to hit what bubble best describes your thoughts on the most pressing challenge to entrepreneurs of color. You heard a couple, and I just want to do a quick gut check. So I'll give you, if you're just joining us, this active participation, I'll give you about 5 more seconds to fill out that poll before we close it. 5, 4, 3, 2, 1. Close the poll. Let's see where we ended. Look at that. Lack of availability and scale of local equity capital providers, followed up by limited family and friends, and then the product size mismatch. Thank you for your thoughts. And I think, like John has mentioned in his chat, the social capital is also vital. So appreciate that. And so now that we're rooted in a little bit of the challenges, and we can come back to that. If you have other questions around that, put them in the chat so we can make sure that we address them. But the heart of the matter, and a lot of people put this at the very beginning, what they want to get out, is around the solutions, right? How do we move forward, given the challenges, to bridge the divides that we're all talking about here, whether it's language, the social, or even tangible capital? And so I want to share at least some findings from our report that talked about, so what do we do about these challenges? How do we change the systems that flow down to the organizations, that flow down to the people, and then back up? And so here is a couple of the solutions that we found. One, and this is really toward that systems change. I believe systems change is about shifting the conditions that are holding a problem in place. And so one is around having multiple equity sources of capital. 2 is about expanded focus and product alignment, which is what we have been talking about, was around some of the challenges. 3 is around greater representation of people of color amongst GPs and other institutional investors. And 4, which is all around mindset, right? How can we shift from this being a moral social problem in the vernacular. I think what happens behind closed doors. I'm not a charity case. This is about business. This is about a business opportunity to invest and close the gap in terms of what folks of color have and what folks that are not of color have. And so that's where I want to take our conversation next. And particularly want to get our male voices in the room here to talk about this. But with the solutions that I talked about in mind here, I want to understand, particularly from you, Akobe and Schweb, and then Linnea, just given the institutional vantage point that you have. Talk to me about what solutions you're working on. If there's something that you're working on that you would have done differently, and we can break that question up. But I'd love to hear a little bit more about the solutions and the things that tend to resonate with you.
I'm happy to go first then. I think from our perspective, when I think about CERDNA, we're an allocator of capital, right? And so what can we do to ultimately support and get capital to the entrepreneurs that we've been talking about and the challenges that they face? It's just, and it came up on your list of supporting GPs of color, right? Because I think that, as Kim and Irma mentioned, those fund managers of color are going to see those entrepreneurs, understand their experience, and understand the communities that they come from. And just that base level is what's required. This is what I love to point out is this is why a lot of white straight men from Stanford get funded. It's because a lot of white straight men from Stanford are running the VC funds, right? And that's where you see that. And a part of our thesis is this notion of, one, that we want to support greater fund managers of color because their perspective and their lens is going to identify market opportunities that others don't or may not see. And specifically seeing entrepreneurs of color, I think Kim's perfect example around salons within a Black community and the role in the economic hub that they play is a financing opportunity that not everybody is going to see. And we've seen that even within our own portfolio. So I think that that's one big aspect of it. And the second piece of it is finding different types of capital. So we haven't necessarily approved an investment, but we are actively looking at revenue share-based investing. It's a critical piece because, again, what we like about it, it marries the risk of the GP or the investor with that of the entrepreneur. So when we think about COVID right now and some of the challenges a lot of the entrepreneurs are facing, it's revenue-based. So if the revenue drops off, guess what? The repayment drops off as well. And so one of that alignment of risk is really, really exciting for us. And why we're interested in this space is we're trying to create new scalable financial products. I think one of the things that we're interested in, and ultimately for us success, is as a philanthropy, we want to try to influence the trillions of dollars that sit outside of philanthropy. I love that. My favorite statistic is if you take all of foundation endowments, it's something like $0.9 trillion in what I think is a $65 trillion asset ownership market in the United States alone. And so philanthropy alone is not going to solve these problems, but can we build scalable, viable investment products or fund managers that will graduate beyond us? That's for us is what success looks like, is that some of the fund managers that we've invested in, like Impact America Fund, is that they're raising hundreds of millions of dollars. And the 2, 3, 4 million that we're investing is like, well, I'm actually raising 10 or $15 million from pension funds. I don't have space or time. We don't have room for you anymore, just simply because of that. That's success. And so the lens with which we look at is, how do we invest in the fund managers we select of color and the new financing products that we're looking at? How are they scalable and replicable? Because it's great if we build a small little, even $100 million fund. The problem is in the billions of dollars. There's plenty of entrepreneurs out there that are lacking access to this type of capital. And so what can we do as allocators of capital to invest in fund managers of color, and then support the ecosystem that Irma, Kim, and Linnea had mentioned? It is that same social capital, the same social networks, helping them find other LPs to come into their funds is a critical role of us and of supporting that ecosystem. I think the fund managers we've invested in, we're helping guide them through their fundraise. We think that's a critical part of our role, as it's not just the capital, it's our network coming to bear as well.
Thanks so much, Schweb. I see Kobe getting off of mute, so go ahead in there.
No, I think, yeah, definitely. I think Schweb definitely encapsulates the perspective that we also take at MacArthur. I could talk specifically about some of the active solutions in terms of what the investments that we've sort of made thus far to really try to identify or address this gap. One being our Benefit Chicago initiative, which is a $100 million place-based fund that we launched in collaboration with the Chicago Community Trust and Calvert Impact Capital. And the goal of that was really to mobilize capital from investors and get that from off the sidelines to really addressing capital gaps faced by social enterprises and nonprofits that are fighting to expand opportunity and build wealth across Chicago, and particularly within communities of color in the city. And we started making investments through Benefit Chicago. And I think one thing that we really that came to head to us, or became apparent, was that in deploying this capital, the need was really that of equity. We were coming at this from a debt lens, and we realized that that wasn't solving the problem as much as we really had intended. So we started looking for some novel ways to really start providing equity-like solutions. One was, has been brought up on this panel, using revenue-based financing model. We're very aware and also really applaud Kim's work in that area and what she's doing. We also commissioned a study with Village Capital, really to look at how revenue-based financing could be employed, but we actually used it in one of our investments really to help an early stage company have the necessary flexibility to expand. But then we also realized that to be more intentional around this, we really needed to get a better understanding of the landscape of equity in the city. Started working with Next Street to really understand that landscape. And that's led us to really identifying an intermediary vehicle for us to support small businesses here using equity. The other way that I think we're actively trying to address this is through our Catalytic Capital Consortium initiative. And that's a new investment, learning, and market development initiative really focused on increasing the knowledge, awareness, and use of catalytic capital, which is really capital that's patient, risk tolerant, concessionary, flexible. It often differs from conventional investment, but it's often very complementary. As Shweb was alluding to, the need to kind of blend different types of capital is really critical for us to be able to address some of these concerns. And so one of the key investments that we were able to make thus far in our Catalytic Capital Consortium is an investment in Impact America Fund. And I think what excited us about that investment was essentially the fact that we're aware that women and people of color have long faced barriers that essentially for starting their own businesses and for raising capital. Often investors are just reluctant to provide this type of financing or understanding the product and service that these companies essentially address and the consumers that they're working with. And so Impact America is a female-owned VC firm led by Keisha Cash. The team is comprised 100% of women or people of color, and the firm's investment strategy is really to leverage the team's cultural competency to find mission-aligned entrepreneurs. And for us, we're super excited about this investment because of our belief in the team, in their ability to find companies that really focus on unlocking value for communities of color. And for us, this is a true demonstration of what Catalytic Capital looks like at work. So those are a couple of examples of how we're trying to use equity or as a way to sort of address this gap.
Thanks so much, Jacoby. And I know, just knowing Linnea and some of the work that you do, can you talk about what what you think are sustainable solutions to some of the challenges, whether through your own platform or others, and also what might be some things, if you could change some things about the industry right now to help push forward some of these solutions, either at an accelerated pace or at the pace in which we all want.
Yeah. So there's so much systematically that stacks the deck against our women and founders of color. And we've talked about some of those, but my personal pet peeve is a term that gets bandied about with great pride called pattern recognition. And I think the very definition of pattern recognition says that we will never make any change. And so I sort of have this kind of visceral response to that term because VCs love to talk about how good their pattern recognition is. And we also love to dwell on KPIs, our key performance indicators. And so we hold our founders accountable to their KPIs, but are we setting our own KPIs for ourselves? And this definitely was our team's focus over the last 3 or 4 months as the world got woken up to many, many more systematic issues is, are we actually tracking? I think the one thing that I have found to be just this enormous solution, and I take zero credit for it, but I just got very lucky. Like most of my career moves, they've been lucky, just being in the right place and very lucky. So when I went to hire a partner for my fund, I very distinctly wanted someone that had some financial experience, did not specifically look for someone with a venture background, but just a go-getter hustler and someone that would get us into deal flow. My partner, Ida Kudum, happens to be Black, and I have been the beneficiary of that gift in countless ways. First of all, Kim, you talk about Black beauty, and I have learned so much about one, the power of Black women in the beauty sector, the power of Black women in our food and just kind of sustainability sector. And I would not have known that, would not have landed on that myself if I did not have a diverse team. And so I think if you are a venture capital firm and you do not have diverse decision makers in the room, you can say all day long how you want to do more in this. And I can guarantee you, you will not get there because you will not be exposed to those networks. And that is just critical for me. So if that game changer, hire a partner of color.
I appreciate that. Simple.
It's not, it's not complicated.
Yeah.
And, this is not rocket science, but it's been proven time and time again.
Absolutely. And so I want to build off that. We got a couple of questions in the chat here, which is one around, which I think is relevant. And there's 2 here that I'm going to draw on. But the first one is, when you think about some of the capital available and those making those capital decisions, and Irma, you also might have a view here because you're on the other end of that, it can sometimes be extractive. And so when you have that kind of dynamic, one, do you think that really is in play? But 2, does it need to be sort of extractive? And Libby, I hope I got the spirit of your question there, but I want to make sure, Irma, you might have some thoughts there.
Well, I think that it is business nonetheless, right? And so there is some level of return that we are looking for. I mean, it's value for money, right? That is what business is. But I think that the question actually goes all the way to the roots, to like who should. It's a judgment on who should make how much money, right? And it's. I mean, you can go all the way to how much should a janitor make and how much should the CEO make. It's the same question. how much should the fund make and how much should the LPs make is the same question, you know? And so I think that we really quickly get into a fight about who deserves what. And I can tell you, I don't think as a society, well, you would get, you know, if there are 6 folks on this panel speaking, you'll get 6 different answers, I think. But I think that we would all agree that there is some limit, right? There is some outer edge that feels acceptable to us. And I think it's really important that whatever instrument we're talking about, whether it is salaries or investment or debt, that you align with the folks who have a similar outer limit as you do. And that's it. I don't think that we're going to get a very hard and fast, it should always be in percent. that's how extractive it should be. So much as saying, like, I think I understand what Gingerbread Capital's thesis is as a business. I agree with that. And I am happy to have partners around the table who feel similar to as I do in terms of what we think our outer limits are.
I'm just going to, Sherry, sort of add to that, because I completely agree with everything that Irma has articulated. And I think that part of the piece of it also is, I think that the reason it becomes extractive specifically in communities of color is because there's this perceived risk, right? When we think about making investments, there's the risk reward paradigm. But then, you know, if you're dealing with an entrepreneur of color or a woman of color, fund manager, or anywhere within that, there's this perceived idea that this entrepreneur is riskier or less than. And I think what we ultimately, as allocators of capital, again, is where our goal is, how do we invest in those to help prove that risk reward paradigm is actually the risk reward paradigm that you would take on anybody else, right? I think that's ultimately what we're getting at, that the market mismatch in this moment in time from an extractive perspective is there's these perceived risks that exist around communities of color that just simply aren't true. It's more, you don't understand these communities, you don't understand these entrepreneurs, you don't understand their life experience. And I think that this goes back to why getting more fund managers of color in this space to prove track record of their own track record, the track record of their entrepreneurs, so that you start saying that it becomes more sort of what I'd say market in that way. And what I would typically say is that we talk about taking risks at the Consortium Foundation, but we're actually trying to take on perceived risks more than anything else. When we talk a lot about that, these are perceived risks that a woman of color fund manager isn't as capable. And Kim and I had this conversation yesterday. It's like, entrepreneurs of color, like all other entrepreneurs, are allowed to fail, just like everybody else, and they're allowed to be successful. And so when we give them below market returns, sometimes that sends a perception that they're less than. And if we're too aggressive, that sends a different perception. And I think that we have to be cognizant of what is the narrative we are setting when we put too cheap capital or too aggressive capital. And I think that that's something that we think a lot about to validate Irma's ultimate point that she's making at a high level, but that's how it shows up in our work on a day-to-day basis.
I love that. I love that. And changing a narrative is super important. One of the questions that builds off of something that you said, Shweb, in terms of models, and even Kim tying into the revenue-based financing, are there examples of other forms of equity capital that are not debt that you've seen work well, particularly for business owners of color? So other ways to inject capital into companies that are not debt and might be different than revenue-based or even some traditional equity that you've seen work well. And I would also expand the question a little bit, just because I'll take liberty as the moderator, knowing that there are different forms of revenue-based financing, Kim, that you spoke about, that also might answer the question, but go ahead. You're on mute. There you go.
There are so many ways of funding than just, debt or equity. In fact, we, just to put a shameless plug, we are doing a webinar later this month about the power of picking the right investor with a series of entrepreneurs. And that's where I would look at the function has to do with the type of business and the model. And the reality, and where, to the point that was mentioned between Irma and Shweb, is that there's so many other models than businesses thinking they're going to be the next Facebook. And that also being able to equate value with those other businesses. There are so many other businesses that have a tremendous amount of value than just being able to create that component. And as a result, the unit economics of being able to grow a business 3x, 4x, 5x are significant, because guess what? When you grow those businesses 3, 4, 5x, those businesses that have the ability to be generational wealth, that they introduce the family and the children and the grandchildren and so forth, that's what's going to change our communities. As opposed to thinking you're going to do something and it's just going to be an exit in 3 or 4 years. This is where you get to the disconnect between what happens in many communities of color versus this perception that you're creating a widget that someone's going to buy and all of a sudden, you know, you're on the back of a yacht. And that's where these alternative funding managers are helpful. And that's where these alternative diverse fund managers see value in the founders that build those businesses, because guess what? They're introducing their daughters and their sons and their grandchildren into the business, and they're hiring other diverse workforce. What we're seeing is when you fund a diverse-led founder, their workforce is 80 to 90% diverse as well, which creates those premium wage jobs that allows them to obtain those wealth goals of sending their kid to college, buying a home, saving for emergencies. Those are the things that are there. And as far as funding models, there's, you know, profit sharing, there's revenue sharing, there's crowdfunding. I mean, there's a variety of different models that can be utilized, but the first has to be related to seeing that there's value in alternative ways of going behind this J-curve growth process, because that's not what is happening in 90% of the market. And there has to be the appreciation of the fact that with the inefficient use of just purely the equity model, that you're going to have 1 out of 10 or 2 out of 20, and that's the only way that model is going to be, that capital is dispersed.
So, and I just want to build on that point, because I think that, you know, there are demand dividend convertible notes. There's tons of products out there. I think the thing that we think a lot about at Cerdna is how do we get access to the communities we're focused on to understand those type of products. And I just even give an example within Cerdna. One of my colleagues was like, well, not every company is going to be a venture capital company. I go, I know. And again, there's different types of capital out there that have different risks, even equity capital. If we just got into the equity capital and we talk about extractive and risk, there's private equity capital, there's venture capital, and each of them have different expectations and are willing to take different types of risk based on where that business falls. And so I think that one of the things I push for is that everyone really wants to focus on coming up with the new thing. And I think actually we need to first inform ourselves of the variety of products that are actually exist and realize that they don't exist for the communities we're focused on or the communities we come from, right? Convertible note is such a standard thing that angel investors that are first-time investors, friends and family round that come into startups. Like, it's the first type of capital come in. But like, how often do I get on calls and talk about, yeah, why didn't you do this as a convertible note or a safe note that Y Combinator is out there pushing, that again, this Y Combinator has standardized for their specific work, but it's, well, how are we bringing that to our community and leveraging that? And sometimes I want to say it's not always the new, it's actually the existing, and to create pathways and access to the existing. That I think that, and you'll realize that those aren't always extractive, there's always supportive. Like a convertible note or even a revenue share allows a company to determine, do I go after the next round of funding from venture capital? Do I go out and get it from PE? Or do I want to go and raise straight debt? But revenue share convertible notes allows an entrepreneur to understand his or her business and then determine which path they want to take, right? And so I think that that's part of where we need to do our own education and actually within our own communities to understand there's opportunity and options out there, but we've got to create those as well.
That's right. I like what you said. As someone who raised funding on using a convertible note, you know, I hear you and I can affirm that statement. And what Lene was saying too, that the time to fail and the time to see what happens, you need time for the business to grow. And so I appreciate what you said in terms of the product mismatch and adopting what already exists. And so thank you for those who have asked questions in the chat. Right now, I want to take a quick pulse. You've heard about some of the solutions. You've heard about the variations in what is happening literally across the country as you have folks from the east to the west. And I want to put a poll up. Which solution do you think you would want to work on or encourage others to work on? Is it about creating multiple new sources of equity capital? So more and more funds, or however you structure it. An expanded focus on and around product alignment, basically what Schweb was talking about and what Kim was talking about. Greater representation of people of color as GPs and institutional investors. I think, Irma, Akobe, and Lydia were all talking about that. Or a mindset shift from a social problem to a business opportunity, which is the underlying thread that you've heard. This is about business, and we need to talk also in that narrative. And I know you might want to work on more than one of these, but pick one that you think is the most important. Just want to get a temperature check of how folks are thinking about this. We'll close this poll in about 5 seconds. 4, 3, 2. Everyone likes my countdown. 1. So we'll close the poll now. Katie, let us know what the results say. Oh, man. Oh, man. So pretty much a little close to evenly shift, but it's interesting. The hearts and minds, the mindset shift from social problem to a business opportunity could be at the core of getting people to change organizations to change the system. So that's very interesting. Thank you for participating there. And so we have about 15 minutes left. Believe it or not, the time has gone by just like that. And I know folks are busy and will need to move on from this, hopefully with some thoughts, but we wanna end our last prepared question for the group, and then want to take a couple of the ones in the chat here, is everyone is announcing, right? Change comes opportunity. You're seeing tons of funds pop up, specifically on entrepreneurs of color and business owners of color. And we got to change our system, and we got to make sure we do things differently. As a Black person, as a Black woman, that sometimes those comments can come off a little trite because we've been here before. We're always going to be Black, and maybe when this phase sometimes rolls over, we'll get back to the real business. So I want to hear from you what you think about what is going to be different this time, what's going to sustain us so that we can build from the existing products and solutions that are working, but also do things differently such that this has staying power. Who wants to start? It's for all the panelists. And so I want you to give your thoughts.
I can jump in here.
Go ahead, Kobe.
Yeah, so my answer to that is simply, let's see, right? I don't know if it's necessarily going to be different this time. I think I'm optimistic. It's encouraging to see these pledges and to hear about the attention and the actions that folks are committing to make. But I also remain, very cautious. I'm cautiously optimistic about the long-term commitments and the desire to make systemic changes. And so I think in order for this to be different this time around, I think we need to it needs to be around two things. One being really looking at the capital, right? So it can't just be financial capital that's happening in isolation. And that being, it can't be a one-time infusion that folks are willing to make. This needs to be something that has to be long-term, multi-year, and continued for this really to resonate. The other thing is that it also, as was brought up on by others, is that this can't happen without the connection and support of human capital and social capital. So financial capital can't be working in isolation. You have to think about all the other elements that are brought in with that to allow for if you're really targeting diverse founders, entrepreneurs of color, women, allowing for them to really participate in this economy. So the capital piece is key. The other component is really accountability. So how are we going to hold folks accountable to what they're stating are their long-term desires to be involved in? I think that requires just transparency. Essentially, folks need to, set goals about what it is that they want to do. Linnea spoke a lot about this. Having a goal in terms of how you're going to increase your lens, and as well as what's going to allow for you to increase it. So what's going to be your pathway to do that? And as well as identifying and really sitting with what's your true incentive for making that commitment, right? So I think with those, I think then we can see if this is something that's really sustained. I'm not holding, as someone who sits at the foundation, I think we're not absolved from this as well. I think we have greater ability to take on some of these risks and really to support. And so it's important that we hold ourselves accountable to really allowing for other types of capital to come in to do this. So.
Fantastic. Thanks, Akobe. Who wants to jump in?
I could go next. I think for me, again, I think this is an interesting opportunity. I think we also need to remind ourselves how this came back into the national conference, into the national conscience again. It was a murder of George Floyd, right? And I think that there were probably the amount of murders that happened before him that will continue to happen. It is a moment in time that we have to remember that the fact that we're having this national conversation as a society is rooted in that. And I think we have to remind ourselves of that. And I share Kobe's healthy skepticism. But I think the thing that I would remind everyone as they get more and more interested in this space, there are people that have been doing this work for years before. There are people that will continue to do this work. If this is capital that is flowing in, to remind ourselves to actually look to the individuals that have been doing this work, to speak to the individuals in the communities we're looking to support, and because they know. People have been doing this. This isn't new. This is new for the rest of the country. Kim has talked about she's lived this for 25 years. This isn't new news for her as a woman of color entrepreneur, right? And so I think that we have to remind ourselves this path, there are people that have been on it before us. It has been much harder, and to ensure that we're actually supporting those people that have been doing this work already because they have the experience, understanding, and know-how, to remind ourselves of that we don't turn this into some new thing. Because my fear is that we're going to wake up in 5 to 10 years and be like, oh yeah, that was a disaster, right? For whatever reason this opportunity is before us, let's leverage it effectively, but to ensure that we leverage it in a way that is actually truly sustainable over the long term. And I agree with everyone. This is a flash in the pan. This is going to come and we're going to get back, but are we going to be better? Will we have made some incremental steps? Is for me, is what excites me at the end of the day, because I think the unfortunate reality is incrementally is how we're going to ultimately get there. I wish it was different, but that's what I'm holding on to as giving me some sense of hope.
Yeah, and Schwab, I just want to build on that, because I think a lot of the dialogue that I've heard in terms of solutions have been what my friends call side hustles, and as opposed to building solutions into the fabric of what they do every day. And so I'm a big believer, and I've made this mistake many times, is that so many of our efforts have been, if you think about Maslow's hierarchy of needs, we've been kind of dancing in this top triangle of self-actualization, where people are lacking fundamental food and water. So we're trying to take people of color and women founders to yoga class. And what they really need is an angel check or a resource or whatever. And so how are we going to build that into the fabric of what we do every day? And so some of the wonderful moves, and I'm not being critical, will be around, I'm going to set up this separate side fund. And it's going to be, 2% of the capital I put out in a year. And so all we're doing is sort of kicking the can down the road and maybe trying to look a little bit better. So I'm not going to be dismissive of new capital coming into the system, focus around founders of color. But I do think we have to figure out a way, how do we actually build that into the core ecosystem?
Thanks so much, Linnea.
Let me just jump on the
Go
points
for
well
it.
made. Yeah, I think we are witnessing. Well, I guess I'll say this. I feel it's not just one thing, right? It takes many moments like this to create systemic change. So I think that what we are experiencing today is a cultural shift, and I'm encouraged by that. But it hasn't yet made it to the water supply. Right? This is not part of our fabric, part of our bones yet. And so it's going to take more of this in order to ultimately get there. And I think one of the things that's missing from that, that path at the moment is that system of accountability, right? Folks who are making pledges, folks who are saying they're going to do X and deploy Y dollars in this specific way. We need to figure out how we track that. And we don't currently have a way to do that yet. And so the first, with that cultural shift, I think next comes accountability. Then we start to see where it sort of bleeds into politics and systems and policy and the rest, such that it does in fact eventually become part of our water supply. But I don't think that we are there just yet.
Appreciate it.
I'd like to build on what everyone said, is that as someone who's been at this for 25 plus years, unfortunately, there's too many temporary things that happen for a moment. And we then go back to a justification because this was what makes good sense. I have seen 3 times this, allocation of capital for diverse founders, and it ends up being, it ends up getting back to here. To one thing that Schweb said is, we have to, as diverse fund managers, we have to be able to provide market returns and a sustainability in order for us to get to the path of growth. But on the other side, where the majority of capital is held, is there has to be a recognition that with this investment in this much, much larger pie, that you're going to get much more of a significant return all the way around. Think of it back to the diversity and integration into the sports industry. It's never going to go back to, a 95-5 situation where 95% of the organization, and I'm talking about the NBA, which is the best example, that's going to go back to its majority of the resources and visibility is all a homogeneous group. It's much more of a diverse organization, and the overall organization is much benefited by this. There's diversity in ownership, there's diversity in management, and there's diversity in players, and that they are better for it. That's where we have to go, because unfortunately, if we think that we're going to apply some capital to a small group, I mean, by 2040, the level of diversity is off the chain. It's changed dramatically. The number of women graduating from college is well over 50%, but no longer is going to be acceptable to only get to a certain point in your career and then you're set. So these driving dynamics are changing the landscape. The challenge that as diverse founders have is they have to not just be well, there's always this, unfortunately, this perception of risk, but the whole benefit of the doubt is got to be removed. It's got to look at it as, as one of my investors said, and everything is, everything's equal when you look at it from a standpoint of all money is green and the economics associated with it. And until that's recognized by the largest group, we're going to go through this whole Groundhog Day scenario every 10 to 15 years where we make 3 steps forward and 1 step back.
Amen to that. And so we have about 5 minutes left. I appreciate the panelists here. I want to just capture a few questions from the audience. And this one should be pretty quick. Has anyone out here seen a reverse convertible note where the investment starts as an equity infusion and then converts to non-predatory debt?
I haven't seen that. I mean, again, typically convertible debt stays as debt and then it can convert to equity, but even the debt terms itself in a convertible note are quite flexible because you can get interest payment holidays and so on and so forth. So, but I have not seen the reverse happen.
Okay. Second question is respect to revenue-based financing. If anyone has any case studies or would put in the chat, and I'm asking this of the panelists, where folks can find any case studies where you have followed revenue-based financing small businesses, either you invested in them yourselves or that talk about the story. Kim, you might have a bunch that you might be able to just share in the chat. That would be great, but any verbal overview for that?
Yeah, I can also, oh, sorry, Kim, I didn't mean to.
I was just going to say, I invite you to come to the side sessions that we're going to have. Happy to share a number of examples with regards to that.
Fantastic.
Yeah, and I can also share the study that we funded through Village Capital, specifically around alternative financing, revenue-based financing, and some of the case examples that kind of came through that.
Fantastic. So we're about to the end of our time here. I believe it's Bhavin and another, I think it might be John, who asked about opportunity funds. I'm going to encourage you to save those for our networking session that we're going to have, and the party's not over yet because everyone here is going to get the opportunity, if you can stick around, to join us for some virtual networking. What's basically is going to happen is that in the chat in about a minute, we'll put in specific links that you can join to join Kim, myself, Akobe, Linnea, Schweb, and Irma for some opportunity to just have a little bit more intimate conversation for the questions that you wanted to ask, but didn't get the opportunity to do so. But before we go, I want to just thank our panelists. We know, and I personally know, 2 hours out of a day is a lot. You all are doing big things and doing the good work and important work, but not just good, but taking the economic prosperity to that next level. And so thank you on behalf of Next Street and on behalf of all of the attendees here who know that they've gotten some valuable insights. Before you attendees go, we have one last poll for you that'll help us round out our effect of this webinar. It's our first time doing it in this style. And so in an virtual environment, it's hopefully it gave you what you needed. How satisfied were you with today's webinar? Fill that in there. We might not show this real time, we'll see. But no, we'll do it. Hopefully you are getting something out of it, and hopefully you'll let our panelists know how much you love them and what they had to say. No pressure there to say something nice. But we'll close it out in about this survey in about 5 seconds. 5, 4, 3, 2, 1. We'll close up the survey there. And we'll show the results to you. Yes. Oh, satisfied and very satisfied. You guys made me feel great.
That was risky.
Yeah, it was risky. I know. I bet on ourselves, right? I know.
Right. Yeah.
As soon as I put the disclaimer, folks didn't want to mess it up. But appreciate that. Appreciate the good feedback. And so in the chat now, what you'll see is the links. What's going to need to happen is you're going to need to close out of this Zoom, and you'll click on that link. Hopefully it'll pop out and it'll say, do you want to close this? And we'll meet you there in the separate breakout rooms. And for about a half hour, or you can close out depending on the tenor of the conversation a little bit beforehand. But that'll take us to that intimate networking. And each, again, panelist will be in a separate room. So room 1, alternative forms of capital. Kim and myself will be in there. Room 2, diverse GPs and other investors and allies. Kobe and Linnea will be there. And then room 3, new narratives is what we've been talking about for America. Schweb and Irma will be there. So I encourage you, click on those links and I'll see you in the virtual session. Panelists, grateful for you, and we'll be in touch. Take care, everyone, and thanks so much.